Next up, we have Ocgn, not even sure how to say it, but OCGN. And it does not look like it's doing too well. So throw this moving average on. Yeah, it is very, very bearish. This is probably going to zero. So, but there's a good chance that we could short this all the way down to close to zero and maybe make some money. So, looking at this, last week closed very, very bearish. There's an area of liquidity way down here, or there at least once was. We don't know if there still exists, but this is way back in October of 2020, so I guess it's only a few years, but pretty much actually almost exactly 3 years. So looking for price to keep heading down to this area. I'd be looking for a bit of a pullback in order to get in on it. You can see these last couple days there has been a little bit of rejection. This candle's pretty indecisive, like a doji candle, and then Friday's candle, bit of a pullback but pretty insignificant, but a little bit of rejection here. Right below, I guess it would be like 36 cents. So I'll be looking for a pullback. If throw our Fibonacci on this, even just a small pullback. I'm not looking for this entire thing because I just don't think that we will get it. So we got to take our next best bet. I mean, price gapped here. I don't think it's going to fill it though. This moving average, I mean, like, price is falling through the floor. So I'd be looking for a retrace of even just this segment here. And then, you know, our 618, 50% 618 level is my favorite. It works so well. So this is what we're looking for. Where's my thing? There it is. So drag it across. You can see price respected this here, and then broke, retested, was stuck in it, finally broke above, sat on top of it, retested, and then finally broke below. So this area is huge, and you can see price loves whole numbers. So right at 40 cents here is pretty much our area of resistance, you know, for the downside. So right bang on, you can see. So that's where we're really targeting. I'd like for it to come up to that area in order to sell it off. I wouldn't sell it off yet just because, like I said, that's these last 2 days did reject a little bit. I mean, you might miss a trade because, like, Monday, right, it's Sunday right now, so markets are closed, but you know, opening on Monday, I mean, this might tank down lower. You might get a nice bearish engulfing candle, but I mean, like, it's kind of, I would wait for a retracement to this area, let it resist this 40 cents, and then sell it back down, just because couple things. So, you know, this month it says on average this moves 91 cents, and this month was 11, but that doesn't really, I mean, these averages are just way out, and it's probably just because oh yeah, it's because the price is going so low, the liquidity is getting less and less. Well, the range is shortening, obviously. This month is set to close very, very bearish, so I do think next month will be bearish as well. But and I mean, even last week's pretty bearish, so there's a chance we miss our trade, but I would still think it's just the best bet to sell off this 40-cent level. So my position would be this. So we'll throw this back on. We know 40 cents right bang on is our, you know, 50%, so that's fair. It's kind of fair price for this now. So let it come up. We'll draw our little zone here. Let it come up to this area, and then reject it. Delete this now, and so something like this, and then target lower. So the range for this, let's see, on average is about 6 cents a week. Last week it was 5.7, so we're good for about 5 cents for sure once price hits this area. So something like this is what I would look to play out. So basically in at 40, take profit at 35, which would actually only really be this area here. That price seems to be creating some resistance too, or some support, I guess, in this situation. So I think actually what we could do, I'm going to put this 35-cent marker in just because it's kind of, yeah, price is rejecting this 35-cent marker a little bit. So it's kind of creating its own area of liquidity, so this might get bought up in this area and be brought up to 40 cents anyways. So I do think this is I wouldn't sell this yet, just because it is creating a liquidity zone right around 35 cents. So I mean, it's a whole number, price loves whole numbers. So yeah, wait for price to come back up to 40 and then target downwards. So and then you know, keep your stop above this zone. So maybe something like right here. It just depends on how much. If you get a bunch of candles come into this zone, and then you know, just make sure that your stop is quite a bit above it. I would let if we can have any of these, I mean, ideally this 4-hour moving average would catch up, and price would, you know, you can keep your stop above that 4-hour moving average, but you might not get it. Probably get the 1 hour though for sure. So that's kind of in our favor. But yeah, I mean, you break it on this 4-hour time frame, it just really looks like this is due for some sort of pullback. There was a big candle here. It wasn't engulfing yet though. So, but if we break it down in these smaller time frames, you can see there is potential higher highs, higher lows forming. There's a higher low here. We don't know if the higher highs in play yet, so that'll come on Monday possibly. But yeah, structure could be changing in this area. It could be getting bought up. So it might be headed back up to 40 cents, and that's where we would wait for a short position. So, and again, we know price moves about 5 cents per week, so this might take an entire week for price to come up to this area. So if this is Monday here, we're looking at the following Monday to be into this zone, let's say, and then it'll take another full week for price to come down to this area here. So this would be our trade setup. Let price come up to this area, let it reject, let it sell back down, and you're welcome to hold it, you know, through this zone, let it come down even further. But this is the weekly range. I mean, this would be our next area of liquidity that we'd have to break. So I mean, it's a good target nonetheless. And then if price blows through this, then you can just hold it. But if it comes down, it starts rejecting this area right at 35 cents again, then you kind of just take your profits. But yeah, make sure you get a 2 to 1, or at least 1 to 2 risk to reward, you know, ideally 3. So you just got to shrink your stop a little bit. Make sure it's above this zone still. Make sure it's above all the wicks that come into this area. And then, yeah, then you'll be good to go. So that's kind of my take on Ocgn here. I mean, I think it's definitely headed lower and lower. I think their financials are not very good, and the momentum is not in their favor. So I do think it's going to be, you know, below 28 cents before we know it. But yeah, as far as the next week or two, I think we kind of know what to expect. Wait for a little bit of a pullback. I mean, if we don't get it, then, you know, you basically just skip this part, and you're looking at, you're looking at something like this. You know, price just blows through this and then retests here, then you just enter the next short position right down to about 30 cents, which is the next 5 cents down. But yeah, I'd like waiting for pullbacks. I like waiting for confirmation. We're in no rush. I mean, I'd rather sell this at 40 cents than 35, right? I mean, that's higher price, so it just makes sense. But that is my take. Let me know what you guys think in the comments, and I'll see you in the next one.